Today we'll discuss about equity and liabilities. As you all know, in balance sheet we will be learning balance sheet of companies. So they have a format. As of now, we were preparing balance sheet in T format. We had liabilities here, assets here. Liability had liability toward owner also, but now we have it in line format. One line, everything will come. And here we use the word equity and liabilities. So let's try to learn about that, what all comes under equity and liabilities. The sequence matters here. Over here, the first thing under equity and liabilities is shareholders fund, then non-current liability, and then current liability. Over here, share application pending allotment also comes, but that only sequence you need to know. It's given on page 1.5 of Grewal book. You can have a look at the format there. So three main things to be tested under this are shareholders fund S, N is non-current liabilities, and C is current liabilities. First thing to be learned. Then under shareholders fund comes three things. One is share capital, S, R is reserves and surplus, M is money received against share warrant. Against this is not supposed to be tested. You just need to know where it comes. So as of now, we have studied about S, then we have non-current liability and then current liability. Under S, we have SRM, where SR to be tested. SR includes share capital, reserves and surplus. This we will discuss in detail later after shares topic is done. It is basically about the amount received on equity and preference share. There are different types of capital you will be learning in that chapter that will be discussed. Whereas reserve means amount set aside out of profit for a particular purpose. Okay, so to meet any known liability, different reserves are capital reserve, capital redemption reserve, securities premium, debenture redemption reserve, revaluation reserve. What is common? Reserve word is there in all, if you see. There are others also. So they will give you a question like this. Capital reserve comes where? You will say capital reserve comes under reserves and surplus. Reserves and surplus comes under shareholders fund. Okay, which comes under equity and liability. So this is subhead, this is main head. Basically, these two are asked from us. We should know it comes on equity and liability side. There, the first thing shareholder fund, it comes under that. Under that, there is a subhead reserves and surplus. Under reserves and surplus comes capital reserve. So such question, this turns out to be asking of these things is a one marker, half mark each. At times, combined half mark can be there and six things could be asked also. It's usually a six marker. It can come in MCQ also. Let's go ahead. Other reserves. Share option outstanding again is not to be tested. Revaluation reserve. This is surplus. We used to have net profit in P&L account. So now the new word for P&L is statement of P&L. So in statement of P&L, this surplus will come. Next heading is current and non-current liabilities. We write first non-current liability, but earlier we used to say payable within 1 year is current liability, more than 1 year is non-current liability. But now we have a little different meaning as per Companies Act to that. So here they have given us the meaning of current liability. What is current? That should be clear to us. First, it is expected to be settled. That means it's expected to be paid in operating cycle of a company. It is, I'll just explain you the meaning of operating cycle. It is for the purpose of buying and selling. It is to be paid within 12 months. This is same as what we were doing earlier, payable in 12 months. Second, does not have any unconditional right to defer this settlement beyond 12 months. It has to be paid in 12 months. You cannot postpone it further. So non-current liability is something which is not your current liability. Now let's understand this operating cycle. Operating cycle is a time between acquisition of assets for processing and their realization into cash. The process, when you have cash, you buy raw material, you make it as finished goods is sold on credit, then they convert it into cash. This whole cycle which is there is called operating cycle. If nothing given, we presume it to be 12 months. It varies from product to product. For a car, it may be months. For a bread or any other bakery item, it may be in terms of days or hours. So anything payable within operating cycle, sometimes like car will take 15 months. Example, if it will take 15 months in production, then converting into cash, etc. In that case, any liability payable within 15 months will be considered as current liability. Let's do some example based on the same. There are trade payable. They have given you two things. Operating cycle for this is 10 months. Expected payment period is 8 months. You will get money for this in 8 months. This is payable by you in 8 months. And in your business, the operating cycle which we just discussed is 10 months. So it's less than operating cycle. It is current liability. Then we come to trade payable where operating cycle is 12 and it's expected to be paid in 12 months. So this will also be considered as current liability as it is payable in 12 months. One of the conditions is that. Next thing which we have is trade payables which are payable in 10 months. But operating cycle of the business is 10 months. It's payable in 15. So it's more than 12. It's more than 10. 10 is operating cycle. Beyond that, we could allow another time till 12 months. But it's more than that. So this turns out to be non-current liability. Next one, operating cycle is 18 but expected to be paid in 15 months. Okay, so this is payable in more than 12 but within operating cycle. So that qualifies it to be your current liability. Next one, operating is 18 and you have to pay it in 24. It's more than 18, it's more than 12, it's 24 months. So it turns out to be non-current liability. So with the help of operating cycle, we'll try to identify these assets as current asset and liabilities as current liabilities. Then comes non-current liabilities. We will have for that three things: L, T, O, P. L stands for long-term borrowings. T stands for deferred tax liabilities. O stands for other long-term liabilities and P stands for long-term provisions. LTOP. These are your non-current liabilities. Let's see some example. Long-term borrowing L includes debentures. So if you are asked debenture comes where? Debenture comes under non-current liability, which is which one? Long-term borrowing. This is subhead, this is head. Both come on liability side. Any of these, if it is asked, it will come here. But there is an exception to this also. And that exception is called current maturities of long-term debt. Any debt which is payable, current maturities of long-term debt. Any debt payable within 12 months. Next 12 months from balance sheet date. Say you had debentures of 5 years. That right now 5th year is going on. Say on 30th June you have to give this 25. And when you were preparing balance sheet on 31st March 25, in next 3 months you have to give this money. In next 12 months, So although it was 5 years, that fifth year is coming to an end on 30th June 25. In next year, we need to arrange money to pay for this. So this will be called current maturities of long-term debt. And in that case, it will come under current liabilities. Any of these would qualify for the same. Next, let's come to the next thing. Under other long-term liabilities, we have trade payable, which are payable in more than 12 months or operating cycle. We saw an example where operating cycle was 18 months. It was payable in 24 months. So that trade payable will be other long-term liability. Any premium payable on redemption of debentures. Any long-term provisions. Provision for a duration of more than 12 months. Gratuity is given to employees when they leave. Warranty is for a longer duration generally. Provision for earned leaves. Next, current liabilities has four things under that. STOP. Short-term borrowing. Trade payables. Trade payable is bills payable plus creditors. We all know that. Any other current liability like outstanding expense. Short-term provision like provision for taxation. These could be small loans which we have for shorter duration. Bank overdraft, cash credit, loan for less than 12 months. So such things, loan payable on demand, trade payables. Current maturity of long-term debt comes under other liability. The meaning of the same was just explained. Unpaid dividend, income received in advance, rent received in advance is other current liability, which comes under current liability under the head equity and liabilities. So these are some examples of other current liabilities. Then we have short-term provision. Provisions for employee benefit, provision for expenses to be paid shortly, provision for expenses, any other provision where the duration is shorter. So you could be given a question like this. This could be 1 mark each. This could be half mark each. Sometimes they give each thing for half mark. Sometimes they give it for 1 mark. This is how we'll be representing it. Provision for tax comes under short-term provision, which comes under current liability. Income received in advance is current liability, and under current liability it is other current liability. We have done a STOP comes under that. Under O it will come. You have to be precise. Then debentures. Non-current liability. It's not given it is to be matured in the current period. So we take it as non-current liability, long-term borrowing. Capital reserve comes under shareholder fund, which comes under reserves and surplus. Bank overdraft comes under short-term borrowing, which comes under current liability. You may put head first, then subhead, but follow the same sequence. Make a table and then write the answer for this. That's about liabilities. Thank you. We'll follow in the next class about assets.